Oh boy, I think we just got confirmation from the Fed itself that a massive U-turn is coming. What Fed Bostic said today really stuck out to me. I sent an alert to the private trading community on this one phrase. I think it is the Hail Mary of information that, to be quite honest, the markets probably did not pick up on today, but if you're watching this video, you will. The markets are slow. You need to be faster than the markets and ready for what is coming next, and boy, is it exciting. Now, other than that, we are going to get into the option activity for Tesla. It was remarkably bullish today. It hasn't been this bullish in a while. You did see about 1.4, almost $1.5 billion worth of option activity. And again, it was exceptionally bullish. Now, I think it's pretty clear what is about to happen next for our markets. I'm not a fortune teller. I don't have a crystal ball. I have been doing this for many years, and I'm not afraid to tell you guys what I think, whether I am right or I am wrong. I am not a financial advisor. Do not trade based on the information I say, but I am willing to go out on a limb and be wrong to express how I think. And that's what we're going to do here in this video, as well as get into some other Tesla stock news. I think you could call this FUD. Apparently a hose, yes, one that sprays water, just crumbled a Tesla Cybertruck, but yet the thing is arrow-proof. Yeah, we have all of that for you and much more here in this video. Let's not waste your time. Let's get into it. We have a jam-packed one. Hit the like button and subscribe to the channel. It is free 99. It costs you absolutely nothing to do, as well as share this information with someone that you think needs to hear it, because there's a lot of things going on right now. It's hard to get concise, clear information, and that's the goal of this video. Let's go ahead and dive into it. So first things first, I want to acknowledge something that is very bullish for Tesla stock. It comes down to the charts. It's the 200-day moving average. Yesterday, you found a lot of resistance at this level. Today, it was support. The last time this actually happened, where you got resistance, you found support at this 200-day moving average, was back here in May of 2023. As you can see, you found resistance here one day. You came up, you found support, you were fighting back and forth with the bulls, with the bears, to hold that 200-day moving average, and then you proceeded to rally about 39%. So usually when this happens at the 200-day moving average, it's more than likely a pretty bullish time to be long in Tesla stock. And we'll get into more in depth exactly what I think is coming for our markets, as well as for Tesla, and ultimately it has to do with the Fed. And really, I should title this video the Bombshell the Fed just dropped, but I'm sure you guys are sick of the bombshell titles by now. Fed Bostic says he sees inflation falling back down to 2% target in the second half of next year. Now, this is not exactly what I would call a bombshell. It is a lot faster of a projection than what the average Fed member does expect. The average Fed member expects PCE inflation is going to hit roughly 2.2% by 2025, and then by 2026 reach 2%. Almost the same numbers for core PCE, but the Fed is currently expecting 2.6% for the end of 2024, 2.3% for the end of 2025, and 2% for the end of 2026. But this is still not what I would call a bombshell. What I would call a bombshell is this. Fed Bostic says we cannot wait until inflation comes down to 2% to start cutting rates. This comes even as the 10-year Treasury has almost fallen 50 basis points in the last couple of days. That's a big deal. Each rate hike is around 25 basis points, so this is equivalent to about 2 rate cuts. So this was confirmation. The Fed is okay with what's happening with long duration yields. Now, what's going on with inflation, specifically the Fed's preferred gauge of inflation? Well, core PCE year over year is sitting at about 3.7% as of September. You're getting pretty close to what looks like almost 2%, at least maybe to not have Fed funds rates at 5.5%. I'll tell you right now, if the economy starts to turn downwards and starts to look less optimistic, in which you're starting to see that, the Fed will not hesitate to give you rate cuts. And that's what the bond market is actually starting to price in. And that's what I think a lot of investors missed today with Fed Bostic. Yield might come down a lot more over the next couple of weeks. But then again, there is no guarantee of that. The biggest driver that has pushed up 10, 20, 30-year yields, it's not because the Fed has their Fed funds rate at 5.25% to 5.5%. That's not it. It's because the Treasury and the government are spending money like they are drunk. So when we start to get more auctions of bonds, and if those yields continue to come in high, and if we continue to see just the quantity of bond auctions that we have seen thus far, which doesn't look like it's going to stop anytime soon, that could bring up long duration yields again. That would be negative. And I think in the short term, really the near term, the next couple of weeks, that's the thing you want to be watching for if you are a bull. You want to pay very close attention to those auctions with treasuries, those bond auctions, are going to be very, very important here in the near term. But it looks very clear. Since the last Fed meeting, Fed Bostic is the first Fed official we have heard speak, and he's comfortable with 10-year Treasury yields coming down from where they are and to ultimately get rate cuts pretty soon. Now, I should point out, again, core is 3.7% for PCE, but your headline is running at 3.4%. So depending on which one you want to look at, you could be even closer to 2%, that Fed's target, if you look at that headline. Fed Bostic also said the Fed funds rate being in between 5.25% and 5.5% is high enough to put downward pressure on inflation. He said inflation can come down to the target without the economy falling into a recession. Quote, "We're going to be in sort of slow, steady growth that is methodical in 2024. Asked whether the Fed would cut interest rates, Bostic said, "That's down the road." AKA, whenever the economy starts to turn down, you're going to get rate cuts. At least in my personal opinion. And again, the biggest quote is here. "We cannot wait until we are at exactly 2% to start reducing rates. It has got to be before that." And let me just be honest. There's nothing worse than being late to raise rates when an inflationary cycle is coming, in which they were. The Fed was very late in raising rates. They should have done it at some point in 2021. We probably wouldn't have seen nearly the amount of inflation that we've seen. But the second worst thing you can do as the Fed is, again, be late and then be wrong on inflation coming down and the economy heading into a recession. That's not the legacy Jerome Powell wants to leave. Just 0 for 2. You didn't get the start right, you didn't get the end right. I guess you could say 0 for 3, and then you didn't get the cut right. They're going to be a lot quicker to cut rates than I think they want to say. And Bostic just confirmed that to me. And these 10-year Treasury yields falling at the pace that they are, although it could only be temporarily, I think you're going to see lower rates than 5% what we've seen. I don't think we're going back to 5%. I think we will start to trend lower, especially when the markets do get worse economic data that continues to come out. The data we got today was okay, but it's starting to turn down. We talked about this in the last video. The labor report came in 30,000 jobs light. Usually we're way over. Like, we come in at like 300,000 when we're expecting 200,000. Usually it's way over. Today was actually 30,000 less than expectations. The unemployment rate went up from 3.8% to 3.9%. Markets were not expecting that. And your ISM service PMI, where you're seeing a lot of the inflation, came in 2 points less than what we were expecting, almost in contractionary zones. All of this is probably why the Russell 2000 had a big day today, up almost 3%. That is your interest rate sensitive part of the markets. Now, Tesla, I would argue, is the best stock to own if rates are coming down. That's because you're still getting high quality. It's Tesla. It's not a Russell 2000 company. They're self-financed. They're making a lot of money. Quality company overall. Long-term business future. But you are getting some bad news for Tesla, if you want to call it that. And this is the main headline of CNBC. The UAW has Tesla and Toyota in its sights after contract wins at Detroit automakers. UAW President Shawn Fain wants to expand the union's battle from the Detroit automakers to Tesla and Toyota and other non-unionized automakers in the U.S. Fain plans to use record contracts recently won with General Motors, Ford Motor, and Chrysler parent Stellantis to assist in the union's embattled organizing efforts elsewhere. The UAW has previously failed in organizing foreign-based automakers in the US, most recently at Volkswagen and Nissan Motor. Fain has vowed to move beyond the big three and expand to the big 5 or 6 by the time its 4.5-year contract with the Detroit automakers expire in April of 2028. This is the reason why Tesla stock underperformed the markets today. Tesla would have been up probably another 5 to 6% today if this was not in the headlines. Now, I'll tell you right now, Tesla's probably not going to unionize. Look at Ford or GM stock. Nobody wants to own that. If you're a Tesla employee, well, your stock-based compensation, your Tesla options, throw some of their employees some Tesla options. Do that. A lot of them are going to opt to do that instead, especially, again, your Tesla employees probably have a little bit more knowledge on markets. I would imagine they work for Tesla. Their stock has done very well over the years. They're probably a little bit more informed of markets than a Ford, GM, or Stellantis employee. And even if GM, Ford, Stellantis employees were more informed on markets and stocks and all of that, they wouldn't want stock options. That's worthless to them. They want to get paid more money. So I couldn't really make a whole video on that, but long story short, the unionization is probably not going to happen with Tesla, but either way, this will put more pressure on Tesla to also raise wages. And this is not a short-term thing. This could be a longer-term thing. If there really is pressure to unionize other automakers, you might have to start giving out some pretty hefty wages to keep that unionization away from Tesla. Or even if you don't. But that's why the stock's reacting, because what if that happens? Overall, if you can't tell, I am not concerned about this whatsoever, but Wall Street was slightly today. Tesla stock was still in the green by about 0.66%, and like we previously said, the technicals look very strong, and I think Tesla stock's going higher tactically here in the near term, but this did put a dampen on Tesla stock today. But it wasn't all really doom and gloomy. Under the surface, it looks like a lot of people are bullish on Tesla stock. You've seen 900 orders in the world of options from hedge funds and institutions, worth $1.48 billion with a positive order value of 67%. For context, Thursday, you had 885 orders totaling $1.75 billion with a positive order value of 29%. And that was when Tesla was up like 6%, I believe. That was Thursday. So today, Friday, was very bullish for Tesla under the surface. Now, if you look at the volume as well of the contracts you've seen expiring on Friday, you had volume on Friday almost 60% to the call side and about 40% to the put side. So again, if you're looking at the broader picture, including retail investors, it was bullish on Friday. I should point out the interesting flow sentiment is only tracking large orders like $50,000 to $100 million trades. It's not including your retail investors. So hedge funds were very bullish on Friday, actually a little bit more bullish than retail, I would say, which is starting to flip a little bit. And I personally believe it's because of what we just talked about with the Fed, with interest rates, and with Tesla being in the prime position to benefit from lower rates in 2024. I implore you, I dare you, I bet on you to Tell me a company down below in the comment section that is higher quality than Tesla that will benefit more from rates coming down, and I guarantee you will not be able to tell me a single company that fits those two criterias. You just won't. I've tried. I've looked, and you just can't find another company. And it looks like Tesla did post, I believe this is their Weibo account, that the Gigafactory is perfectly interpreted. Construction began in January of 2019, and in less than 4 years, 2 million vehicles were launched from the production line. Complete vehicles are shipped from the assembly line within 40 seconds. I think this also highlights something that we shouldn't leave out. We'll talk about this more over this weekend. I do plan to make a full kind of analysis on Tesla stock for 2024 over this weekend. It's time. You got to think about 2024. Forget 2023. 2023 is over in Wall Street's mind. Look at 2024. We're going to get into the fundamentals where I think Tesla stock is going to go probably tomorrow, so stay tuned to the channel for that one. But Giga Mexico, Elon made it very clear. If rates come down, if the Fed does cut rates, if long-term treasury yields come down, Tesla will be a lot more aggressive in actually developing Giga Mexico. So that looks a lot closer than it did maybe a couple of weeks ago. And as we have already heard, Tesla has all of the permits to actually break ground on Giga Mexico. The ball is now in Tesla's core. It looks like Tesla Korea registered 2,829 vehicles in October. This has resulted in a cumulative total of 10,000 units registered in Korea this year. Almost all registered vehicles are Model Y produced in China. Now, the reason this is so low, a little bit over 10,000, and you delivered 2,800 vehicles in October, is because we just recently got all of the permits and things that we need to start importing more vehicles to Korea. And that was in the news. I believe I made a video on that like 2 weeks ago. And take a look at this article published a couple of hours ago. It says Tesla Cybertruck torn to pieces by hose. From Hollister, California, its stainless steel panels immediately crumble from the pressure of the stream of water. A Tesla Cybertruck was reportedly torn to pieces Friday after getting sprayed by a hose, as seen in the now viral video. I cannot find this video, so if you guys can link it down below in the comment section, that would be fantastic. I can't find the video, but it sounds like complete BS. Someone trying to rag on the Cybertruck for one reason or another. They probably have a short position on Tesla themselves. But the vehicle is literally arrow-proof. There hardly was a mark. If you look at other similar vehicles like a Ram 1500, an arrow will go through the door of a Ram 1500. So I think apples to apples, the Cybertruck is way more durable. I think this is really just a fun article that you shouldn't get too hung up on. It's not going to change the demand outlook for the Cybertruck. And I'm sure you guys already know that, but I just want to be very clear on that here in this video. The board of Cruise, the robotaxi company controlled by General Motors, has hired an outside law firm and technology consultant in the aftermath of an accident that led to it getting suspended all driverless vehicle operations. Cruise said Friday, this is not great news for the entirety of autonomous vehicles. You want to see Cruise operating, breaking ground, so it's a little bit easier for Tesla to do so when it's Tesla's time. And apparently this user posted a video, it looks like on Instagram Reels, of his vehicle. He charged to 100%, but he gets in the car and it's at 78% battery. That is because he apparently has Sentry mode activated. So if you guys have your Tesla, don't just leave Sentry mode on unless you absolutely have to, because it will drain some of your battery. Last but certainly not least, I want to make it very clear on my stance of Tesla over the next coming weeks here. I think tactically, you want to be bullish. I think today we would have been a lot higher if it wasn't for this UAW fear. I'll tell you right now, and I've said it before, and if you're a viewer of this channel for a long time, you're going to hear it. The markets can handle bad news, they cannot handle uncertainty. Same thing with individual companies, same thing with individual pieces of news. The uncertainty is the UAW is, Tesla's going to unionize. I'll tell you right now, with these kind of situations, it only lasts for like a day or two. Look at the Middle East situation. That's gotten worse. It doesn't look like it's gotten better, but the markets have gotten over it because the uncertainty, for the most part, has come to pass. It doesn't look like anyone else is getting involved. Conflict's not worsening. So the markets got over it. It's as simple as that. That's why I say the markets can handle bad news. They cannot handle uncertainty. When the bad news actually came, it was time to buy the markets with that specific situation. Same thing here. The markets will get over the UAW, Tesla stuff as long as there isn't any more updates that, as long as we don't get an update like Fremont is starting to strike or might strike soon, it's not going to be a big deal for Tesla. Markets will get over it. And I think rates coming down, I think the Fed being more dovish, you have to be tactically bullish. You don't really have to do anything. I'm really not doing anything right now besides just, trading different stocks. I'm not going all in the markets right now. But you have to be leaning towards tactically bullish until the economic data starts to turn down and it starts to look like we're going into a recession. That's just the bottom line to it. And it looks like the data is starting to do that, but you need to see a jobs report that's like 40,000 jobs or negative. And then I'll tell you right now, the markets are not going to react bullishly to that said jobs report when it comes in really, really low. The markets will at some point towards maybe the end of this year, the holiday season, if some of those holiday numbers are disappointing, if the GDP numbers start to look a little bit disappointing by December, that's when the markets start to turn down. That's when we possibly get rate cuts, and that's when the markets will freak out. I still think a freak out is coming. Don't be confused on that. But I think in the short term, there's way too many things going for the markets than not. You have to be tactically bullish. I'm not the most bullish individual until we see the final flush out. But again, tactically, there's nothing I can say that is bearish enough to cause stocks to fall. So trade that information how you want. I've been very clear. I think Tesla could easily hit in between 245, potentially even 260, maybe higher than that. If yields come down, the Fed does get really bullish, you could rally quite a bit with Tesla. So keep that on your radar. If you look at the RSI, that is at 44.20. Normally when you hit 30, you can bounce to about 70. That would suggest a much larger rally to come. You really want to be watching the moving averages here. They're your 50-day, your 100-day moving averages. Those are in between about 245 and 251. 50-day moving average at about 245 and your 100-day moving average at about 251. If you break out above that, then you start to really get squeezy. Maybe some shorts start to cover on short positions. Maybe there's more bullish positioning in Tesla. And I think at these prices, Tesla's a really good buy. But I do think you will get lower prices at some point in 2024. I could be wrong though. That's why I'm still buying right now, but I'm not going all in right now. So that is going to conclude this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know what you guys think about all of this information. Thank you for watching. If you guys would like to come trade with us live in real time, come get notified every time I do make a trade. Link down below in the description of this video. My name is Michael Tyler. Thank you for joining me again, and I will see you in the next one.